Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for December 5th, 2019. December's in full swing now as we push toward the end of year holiday, and the market is on a bounce mode. And the key level to watch in the S&P 500 index, well, starting with the daily chart, is 3,100, just a round number. On the Nasdaq, we're watching 8,300, and the prior high just shy of 84. 82 is down at the lows. Simple, I know, but just making reference of key levels that the market is watching too. On the Dow futures, it's 28,000 and 2,700, and on the Russell, we're still watching this 1,600 level. So the market is bullish, at least for now. While the Russell is above 1,600, S&P above 1,310 or 3,100. That's the Dow that's above 28,000. And again, the Nasdaq 83 in terms of index futures. One other quick note that actually did come into play in the morning reversal is the weekly expected move. It's roughly 3103 on the S&P 500. So that came into play on Monday session. Tuesday pushed out but yanked right back inside on the gap Wednesday, which was the opening print. And today's session low and reversal was also 3103. So that helps get a sense of intraday timing, intraday tactics, and some divergences or buy signals that might occur on the intraday basis. Or if you're putting on swing positions, spotting markets into weekly expected moves, and maybe a good spot to get some puts, or in this case, some calls. Again, just bigger picture concepts. Now, the S&P's not at all-time highs. It's just a little bit shy of them. Let's pull back to the daily chart, take a look at the structure, and we'll see that on this time frame with volume included. 2019 so far has been a rally to end all rallies, mainly in the first of the year, but with 1, 2, 3, now almost 4 pullbacks or retracements along the pathway higher. So we keep watching on our sectors. We'll do a quick glance at that on our daily sector grid, just to note what's up at the highs and what might not be. So financials are in the danger zone, which is this upper trend line. Technology pulled back a little bit stronger or stronger than expected to the downside. Its pivot is 85 per share. XLY is in this tightly coiled range. I think the thing to watch is staples, and maybe more so to that than the healthcare sector. That's XLP and XLV. These are our defensive names right there, along with utilities, which transact or trade like bonds. We often take a look in the evening videos at strong stocks getting stronger for a couple of reasons. First is it takes a look at the sector strength, or which sectors are in the lead, with those stocks making new highs, and gives us a sense of market breadth, or at least market participation, risk on, risk off. And the other gives us opportunities for buying pullbacks, retracements, flags, or any other type of bullish positioning. This is a scan, again, of those stocks making new yearly highs or 52-week highs. We're going to scan in the S&P 500. I have them sorted by sector, healthcare, and staples. Doesn't take a lot of information to show that that's not something you want to see if you are a market bull or a raging bull expecting much higher equity prices. Money would be flowing into financials. You're seeing Moodys and JP Morgan. We'll take a look at that, but not across the board. In fact, BristolMyers Squibb was a big trender candidate today. Merck, MRK, and some other healthcare names. If you've ever had a can of soup, Campbell's soup, that's a consumer staples. Even if the economy's in shambles, you still have to eat, you still have to drink, and McCormick is a spice company. You still have to spice your food, ideally. And then Cisco and some of the others. So we just put those into a new yearly high watch list. You can click through individually. And I just wanted to highlight some of those candidates. Again, the main idea is because the market's at all-time highs, which sectors or stocks are strong, and the grouping is the defensive names. Quick scan shows us Allergan, AGN. We like to buy pullbacks, retracements, or flags to rising moving averages or rising trend lines. on the daily chart. That can be done with in-out spreads if you're looking to be a little bit more conservative. Vertical spreads, my preferred methodology of intraday or short-term trading, swing trading, or other types of bull positioning. So Allergan gives us another opportunity for pullbacks or retracements. Merck, MRK, not necessarily a grand uptrender, but it did break out to new highs on a little bit of stronger volume. And again, a little bit similar to Merck. McCormick Spice or McCormick Company is uptrending, but it's a little bit choppy for my taste. JP Morgan, there's the one we want to look at. In the financial sector, JP Morgan did break out of a rising trend line. So it is on the buy list. It is on the accumulation list. And the trades are those bull flags. A couple of bull flags, pullbacks to that moving average. And the most recent sessions, 1, 2, demonstrate that buy candidate or buy opportunity and what we expect. Just happened a little bit quicker than anticipated. Usually takes a couple more sessions and 1 or 2 to get us back to the prior high. This can be also a realm of intraday traders finding a stock that is strong, on fire, being accumulated, high volume, break out to new highs. That can be candidates for intraday pullbacks, intraday options as well. DR Horton is a little bit more stable in the uptrend. We would prefer these type of stability, these rising, stable moving averages, and this 20 and 50 daily exponential moving averages, and strong, steady, rising volume. That's what we want to see if we're bullish or putting on bull positions. We talked about BristolMyers Squibb in the intraday chat today, given that it was a trend day and really has been in 3. I'll zoom that in at the 5-minute chart over here. It's been in 3 trend days in a row. But that's how stocks that are strong tend to get stronger. Strength begat strength, not weakness. So a couple of trend days, 3 trend days on BristolMyers Squibb. Back to the hourly chart, because that gives us perspective. Moodys rating agency up there at new highs, trend day today, and then Cisco and a couple of others. Again, that little trend candidate. Want to buy the pullbacks to the moving averages or bull flags. And one note of interest when you are putting on your positions, if you see red volume or sell side volume decline, which is this picture here, as price goes down, red sell volume also goes down. It's a very bullish sign of bull or bear exhaustion. So if bears were serious, they'd be pressing the edge, pressing the odds, and they aren't doing that. So Cisco, SYY, is a good example of uptrending candidates, keeping on the upswing there. We'll finish up with PPG, and that is nothing stellar, but did register on our scan list as a new high with strong bull volume. So look for these for potential continuation patterns. And if you're looking at this in real time saying, oh gosh, this can't go any higher, remember that PPG, just as an example, when it gapped above the 2019 high, well, that's a new 2019 high, but not just that, it showed up on our list as new 52-week high, and every single time it made a new high, well, those were additional new 52-week highs. And again, the concept I'll leave you with, as always, is that which is strong tends to get stronger. Bull market, bear market, or just sideways market. Sometimes it's best to look at individual stocks if you're having trouble spotting, trading, or positioning into the broader indexes. There's always something moving. And if you like the downtrends, you would flip the scan to the downside to show stocks making new 52-week lows. There's just not as many of those happening, at least in today's session, with the market near all-time highs. So these are candidates to look at, study, and make your own trading decisions. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for December 5th, 2019.